Hey all, welcome to ShareTreck. This is Raj here, friends. Let's keep it simple. It's been almost a week or more since we started doing live streams, so now it is time to make it simpler and much more compact. And I think I'm getting a little bit more experience with this live stream business. Let's start off with the CNBC website, and all the indices are looking healthy positive. And I'm thinking that probably this is going to be a dead cat bounce, because overall the bear channel that we have seen is intact and we are very close to crucial support levels, which could act as a bounce off point. But we'll have to wait for the next resistance to validate itself. If the next resistance is validated, then we can see the stocks coming back down. Now, I personally am on a shorting spree. So all those positions that I've already had, which were loss making, I decided not to touch them. But I'm shorting Tesla and I'm also using FNGD. Now today, my plan is to increase my short positions, and the way I plan to do that is I'm looking at the bounce back. I'll look at the next resistance, and when the next resistance gets validated and we come down and bounce back a couple of times below that resistance, I would assume that that would be the point to buy further shorts. So I'll explain that when we go into our TradingView platform. With that said, let's get started. We have news out here. If you look at the CNN page, of course, it's very depressing. There is nothing that great out here, all pessimistic news, whether it is war or whether it is tariffs or whether it is hammered stock market. So nothing good out here to pick up the market. If you look at the economic calendar, then you're looking at JOLTS coming up at around 10 o'clock. So I'm thinking that the bounce back will probably start when the market opens, as we can see in the future. And what are the chances of JOLTS job openings coming out favorably? Given that Doge has been working very hard and it has got domino effects on the private sectors. So I'm thinking that JOLTS might prove to be the catalyst that is going to push us back down after validating the next resistance. And that's the point of time where we should watch the market closely to see if one could get into a shorts position. With that said, I'm thinking that Japan is still in status quo. I was thinking that we have to keep track of Japan for the yen unwind trade happening. But right now, Japan seems more or less the way it was before in terms of these stats that we got regarding the growth rate, and we'll have to wait for more information on Japan. So right now, I think the yen unwind situation doesn't seem to be imminent. So with that said, let's go on to our TradingView platform and look at NASDAQ futures. We have a very nice line of support out here for us, which has been coming along for a very long time, and very rarely have we touched the support. We are touched and bounced back, and we had a huge area of buying power which would have helped us to stay above. But on Friday, we had dropped below that, and yesterday we managed to creep back into it. Now, this could again mean that we may rotate within this area of support for NASDAQ futures. It remains to be seen. I don't see a dead cat bounce until we go somewhere around 22.16 on the RSI scale. But because we are already kind of oversold, we could still experience a dead cat bounce. And I think that's what is happening in the markets right now. So I'm thinking that this trend that we are seeing here, which has been a steep fall, is trying to correct itself a little bit, but overall it is still on its way down. And the big test would be us breaking down below this diagonal line of support. And the other big test for shorting would be to bounce back from 19,727 all the way down. And that's when I think we'll be in a position to add to the shorts. That's the way I'm thinking. Of course, all personal opinion, not financial advice. This is very risky market. You have to be careful. Let's look at the next support that we may have. It's going to be at 18,533. And NASDAQ futures is up 0.54% right now. And let's go on to S&P futures. and S&P futures has converted one of the supports it had earlier, which happened to be at 5,680 into a resistance. So that's a headwind out there. And the other support that we had at 5,639 is continuing to be a support at this point of time. And we are in the futures, we are still above that line. We are at 5,646. So S&P 500 is also looking ready for a bounce back. And my test for shorting would be to see that S&P 500 touches 5680.25 and then comes back down and then goes back up again, but not able to clear this level of resistance. So at that time, when it's starting to come down, that's when I'm going to look at buying a little more short of maybe FNGD or TSLS. So that's the way I'm planning. That's my strategy. And if you look at the dollar index, it has got huge support out here and it has remained above that support. It's come very close to it, but remained above that support. And USD JPY is firming up a little bit, and it seems that the economic reports that we got for Japan relative to US seems to show that Japan is in a slightly better condition. So things are looking better, I think, out here. So Japanese yen unwind, we don't have to worry about it for at least the near future. And 10-year yields are starting to go up again. It's a up and down whipsaw effect out here. Seems that this diagonal line of support has been able to help us hold on to it. Now let's go on and have a look at AI and let's get into specifics. NVIDIA, it had a lot of support out here in this green area, but it broke down below that and fell down below the support that we had at 106.91, but pre-market it's at 107.57, back into this area of support, and we have to see if it's going to be able to break out above that or it remains contained within that area, because we still have a resistance at 109.60 and our MACD is very weak, momentum is also very weak. So I'm thinking that this is just a dead cat bounce, and the moment we fall below 109.34, that would be a little bit of time for loading up on NVIDIA shorts if you are very adventurous. And we have support line out here which shows that we could go down further. Next we look at Meta. Meta is fallen below this diagonal line of support, the second line of support that we had. And I'm just going to trash this line of support. I'm going to remove it because we don't see much out here. There was not multiple heads on it, so I'm going to remove that. So actually our support is going to be the 200-day exponential, which is sitting at 574.50. 574.50 is our support, and our MACD and momentum both are weak, and we are due for a dead cat bounce out here. And I think we could go further below that if we were to go behind to the past and have a look at it. I don't want to go too much into the past. I'm just looking at this area out here and saying that probably we have some support at 22.11 on the RSI scale. So that's where I think we could actually have a bounce back. But right now we seem to be having a bounce back of around 3.99 off the 30% mark on the RSI. I don't know if this is going to hold. It could go down further. Next we have got Google, which is up around 44 cents or 0.26% in pre-market trades. It has converted a support at 169.10 into a resistance. I'm very happy to buy a little more of Google because the PE is looking very attractive, and I think even if they are forced to dispose of the search business, they could go into the AI and start working on building that dominance in that area. And I think that AI is going to dominate search business going forward, and Google is positioned in a very good manner with also historical data as well as experience to excel in the search area. So that said, I think I would go in more for Google. The next support for Google happens to be at 164.49. Next, let's go on and have a look at Amazon. Amazon has been dropping significantly. As you can see, it's mirroring what happened in the S&P 500. Fundamentally a very good company, and I think if it was to bounce down, it could go down all the way up to 20.95 as we have established in the past, 20.95 on the RSI scale, and it's nowhere near that at this point of time. So further downsides is possible, but the pre-market action seems to show that a bounce back has already started taking place. Gain of around 0.55% in pre-market trading has already happened, but the chart looks very weak to me, and our next support is going to be here at 189.18. With that said, let's go on to Apple. Apple has already fallen below this diagonal line of support. I forgot to mark it red. I'm going to do so now. And then we have this support at 227.22, which was breached, and we fell down below that. So I'm going to mark that also into a red color. And I'm going to pull down this line of resistance on the diagonals a little bit further, because we are approaching that area. And right now what is preventing us from falling down further is the 200-day exponential at 225.35, and if it continues to hold, we'll be in a good position. But as you can see, RSI shows that we can fall down further. MACD shows that we are very bearish, so further downside for Apple is expected, and the futures are also showing a further downside of around 0.45% already in the market, and much more to go. So Apple could fall down further, that's very clear. Microsoft is up 0.22% in pre-market trades, and we had support at 380.20, which seems to be holding because we are at 380.95. If we break down from this support, then we'll have to plot new support levels for Microsoft. And I would say that, oh my god, this candle is huge. Is this a candle or is this my artifact? It's an artifact, sorry. I was a bit confused when I looked at it. I'm going to just expand Microsoft chart to see if I can plot the next support, and I can see quickly that there is a support level out here. It could be more like a rectangle support, but definitely this area is going to be a line of support, and that happens to be at 376.03, which is the next support that I can see for Microsoft if we fall down below the current level of support. That said, I just going to recalibrate the charts, move out a little bit so that we can look at the next stock, which is Tesla. And Tesla has been falling magnificently, and I think that we have this area of support which probably should be marked red because we have fallen below that. It's an area of resistance for us now. Our next support happens to be at 213.01, but Tesla has got a wonderful bounce. It's at 228.16, which is somewhere around here, tracing back a little of the losses that we have had yesterday. It's almost up 20% of yesterday's red candle, so that's very healthy. And we have still not completed the gap fill. If you can see, I'm going to temporarily put a line out here to check whether we have done the gap fill. We haven't done the gap fill, so our gap fill is going to be the first point where we can expect support on the way back down, and then the next support is going to come immediately after that, and that's going to be at 213. So just to complete it, I would say that first support at 217.81 and next support at 213.01, and if we blow past that, then we are going right into 183.91. and you'd ask, is it possible? I think it's quite possible, because on the RSI scale in the past we have gone all the way down to 12.49, and I don't see why we can't go there and create a new record for the RSI scale given all the negativity around Tesla. The only thing that gives me pause is the steep drop that Tesla has had. So there could be a little bit of green days in between, and then we'll continue to go down, making this drop a little less steeper than it is right now. And we have already met our reverse head and shoulder target, so that's one thing out of the way for us. And that target was at 227.92, and right now we are at 228.16. After having gone down below that, we have bounced back. So with that said, let's go on to look at Oracle. Oracle is down 0.03% in pre-market trades. It's doing a little bit of a bounce back out here. It has not completed the gap fill, so further downsides are still imminent, and our support is going to be at 142.73. MACD, momentum, both are looking weak. So things are not that great. AMD, again, I'm very tempted to short AMD because the PE is very rich, But given the fact that AMD has dropped so much, I'm thinking that there will be opportunities to buy the shorts on the way back up. And today we are going up 1.85% already in pre-market trades. But I'm pretty sure that we are going to be staying below this diagonal line of resistance. So even if we go up further, I think our ceiling is 100.58. So if we approach close to 100.58, I might buy AMDS, which is a shorts for AMD. And I would try to ride the way back down. And if you look at Intel is up 1.25% in pre-market trades, and there is a very good support out here at 18.87, and I think that's where it's going to gravitate to. SMCI is up 1.36%. It's been consolidating out here. It's created a bear flag, and the bear flags usually break down on the downside, so I'm thinking that it can come down further. Next, we look at Qualcomm, which is up 0.89%, consolidating a lot in this area, but it's still not managed to break this diagonal line of resistance. Probably it will try to do that today, and then we'll ride our way back down on this line of support. MACD is mending, momentum is also picking up. So Qualcomm looks set for something better. AVGO or Broadcom is up 1.32%. It's been consolidating out here. MACD is improving. Momentum is also improving. And pre-market, we are up 1.38%. I don't know how much up we can go. If we break up above this candle of yesterday, then I would definitely say that there is strength in Broadcom. Palantir, very rich still on PE. It's up 3.18% in pre-market trades, continuing to stay above the support of 73.34. If we break that support, then we are going to come down to the support of 64.14. Downsides are imminent because MACD, momentum, both are looking weak. And having said that, I think I would skip the others and I'll just look at JD.com. It's up 2.12%. It's managed to break down below this diagonal line of support. I'm going to give it benefit of doubt until the market opens, and if we sustain above this diagonal support, I would be heaving a sigh of relief because I got a negative position on JD, which I'm anxious to get out of because I'm not very familiar with the Chinese market. So it's a misadventure that I need to correct as soon as possible. Let's go on and look at genomics. Verve has dropped again 11.33% yesterday. This diagonal line of support still remains our best bet for support, and that will hold for us today. Inco Bioworks has dropped 7.82% yesterday. It's recovered almost half of it. It's gone up 3.45% in pre-market trades. I'd be really happy if we could go above this red candle of yesterday. MACD is mending, but momentum is pretty weak, and RSI is close to overbought. Caribou Biosciences looking very bad. There's a minor line of support at 1.05, which should hold. CRISPR Therapeutics up 0.83%. It dropped 4.81% yesterday, but still very much above the support at 42.81 and below the resistance of 44.58, and 44.58 will serve as the resistance today, and support of 42.84 is going to hold. That's the way I look at CRISPR Therapeutics. Grail was down 2.40% yesterday, up 2.77 today, recovering all the losses from yesterday. And today probably we might form a red candle, and our support is going to be at 31.95. MACD, momentum, both looking very weak, so it's likely to come back down. Prime has fallen below the diagonal line of support from a previous bear channel. Pre-market, there are no trades, so Prime is looking bad out here. Beam Therapeutics is up 2.06% after falling almost 9.8% yesterday, recovering part of the losses from yesterday, and we still have support at 25.10. MACD, momentum, both looking weak. Altimmune dropped 2.06% yesterday. It's up 0.82% this morning. Looking weak on the charts overall. And Bluebird Bio just managing to exist out there. There are no trades in pre-market, and also Allogene is up 2.44% today. Still, I think that we have support at 1.79. Chart is not looking that great. MACD is bullish, but momentum is dropping. It's above average, so that's what I think is a positive out there. We are looking for earnings on 13th of March. After hours, maybe that could give a catalyst. mRNA is up 1.36% in pre-market trades, and we had this double bottom, and I'm going to just put a target for the double bottom and see what is the best we can eke out here. So if this is the top, I'm going to clone this and pull this up here and put it just roughly out there. I think it could go all the way up to 44.20. mRNA could go all the way up there, and we have a support at 35.38 right now. So mRNA could mend. MACD is bullish, momentum is above average. If we go with that kind of equation, mRNA can mend and it could have a price target of 44.27. ARCG is up 1.36%. It still has got resistance, which happens to be at 22.94, and we are right now at 22.29, and that brings me to PACB. Is not looking good, not worth talking about. Intelia is up 2.11% after dropping 8.60 yesterday. I'm just going to pull this diagonal line of support further out here and say that this is going to perform the role of a support. And I would also like to draw another line of support out here, which is going to be at around 8.97. I'm going to make this line a bit thinner, and that's exactly where we stopped a couple of days ago, and that's where I think we'll get a bit of a support today. Illumina is up 2.63 or 2.65% in pre-market trades. We still have a huge pocket of resistance above, and our support is going to be at around 80.60, and our resistance is going to be at around 88.95. So that's the way I see Illumina playing out today. IMTX is down 6.22% in pre-market trades. It has got a support, the bottom that it has touched in the past, at around 4.17, and it's imminent that that will act as a support today. If we break through below that, I think we'll be charting uncharted territories. It will be a new experience for us. Eritas is flat in pre-market trades, and let us go to Vertex. Vertex is looking pretty decent. It's up 0.40%, still following the diagonal line of support out here. MACD, momentum, both are looking pretty good. Vertex is good. And let us go on and have a look at the indicators and look at how S&P 500 is faring. S&P 500, let us recalibrate this chart and look at S&P 500, and we can see that we have dropped below a critical level, and I think that critical level was this particular line, which is at 5,659.34. So having dropped below that, I think that we are looking at new lows, and I'm going to put another line of support somewhere out here, just pulling it down. This is the gap down that we had in the past, which got filled up, but I think we have a very good support out here. I am going to mark this green. So this is the first level of support that we are going to see for S&P 500. And if you look at the S&P 500 futures, we had seen that S&P 500 futures shows a positive open. So I'm thinking that the resistance is going to be at 5,659. Let us quickly go and look at the futures and see where S&P 500 is right now. It is at 5,648.75. 5,648.75. So yeah, it has improved a lot, and it is still below 5,659.34. So this is going to be the first level of resistance today, and the second resistance is going to be the 200-day exponential moving average sitting at 5,709. I still think that we are in a bear channel, and we have not broken out of the bear channel yet, but movements could be made today for a dead cat bounce, and that could eventually lead to lower highs and higher highs, and we'll have to see how that goes. Nasdaq is down 3.81% from yesterday, and in the process it has converted a support at 19,700 into a resistance. It also converted another support at 19,458 into a resistance. 19,458 is where we ended up yesterday, and Nasdaq future shows that we have gone back up again to 19,575. So if you come here and look at 19,575, it is above 19,543. So we are back into this area pocket of support, and we happen to have resistance at 19,744. So that's what is going to hold us back today. If we break through above that, then our next resistance is going to be 20,039. But if we bounce back down from this resistance out here at 19,744, I am looking at a support at 19,549. And if we fall below that, then this diagonal line of support comes into play. And if we touch this diagonal line of support and bounce back, we would have created a new lower low. So we would have started a new bear channel, and then we'll start looking out for lower lows and lower highs, or consolidation and then a move up. But if you look at the MACD, you can see that it's very bearish. We are still away from the depth to which it has gone on the RSI before. It has gone on to 23.16 on the RSI scale in the past. And looking at the pessimistic market headlines and looking at the uncertainty around tariffs and the geopolitical tension and everything that is happening, I'm thinking, why not the market set a new record for the RSI scale as well as for the MACD? That is very much on the cards, regardless of the positives that we see in this morning. So I'm thinking it's dead cat bounce. If you look at VIX, VIX is down 1.40 in pre-market session. So it's cooling off a little bit, but still we are at very elevated level of VIX, and we could go up further. There is plenty of potential. So if you look at Dow Jones, it's down 2.08% as of the previous closing, and we converted a support at 42,528 into a resistance, and we also have a new resistance at 42,346. Both of that is going to hold, and also this resistance is the 200-day exponential moving average at 42,027 is going to be a strong resistance. And MACD momentum, both are looking pretty weak. Russell index has dropped significantly, but it has regained a whole lot of its losses from yesterday. And I'm thinking that MACD momentum, both are looking very weak. Possibly this is a dead cat bounce which will mend back and it will come back down. There was a lot of money going into regional banks in the trading, I think post-market yesterday. So I think that probably regional banks are propping this up. And let's go to put call ratio. Put call ratio is almost neutral, I would say. If I look at QQQ, it shows a gain of 0.37% in pre-market trades. So a dead cat bounce is definitely there. I would wait for around 10:30 because 10 o'clock we'll get economic news, JOLTS report, and that would determine the direction of the market. Till then, there is an opportunity to look to buy some good shorts, assuming JOLTS is not going to be favorable. With that said, my friends, I would like to check what's happening in the comment section. Not much out here. Inf is saying sky is falling apart. Oh, don't be melodramatic, Inf. Everything sells off, even stuff like gold. I think that people who have gold and who have held gold for a while see a lot of profits out there, and then they see stocks like Google for a huge discount, and also they can see leverage funds like FNGD going really good. So they may decide to buy a little bit of the underlying or a little bit of those shorts, and they could get the money from gold. For example, if I look at my own portfolio, right, I can't sell the ones that are on loss. Mentally, I don't feel like it, but I would like to dollar cost average them down. And where will I get the money from? The money that's making the shorts, that is making a lot of money for me right now, I don't want to get out of it. In fact, I would look at opportunities to buy more shorts, and to buy more shorts, I'm looking at a bounce up. And when the bounce up happens, tests the resistance and falls down, that's when I'll buy a little more shorts. So where is the money going to come from? If I'm not going to sell my loss-making positions, and if I'm not going to sell my profitable shorts yet, the money has to come from gold. And I think that's the reason why gold is falling. But I think gold should pick up going forward. And if you're saying, so Raj, you think short relief rally, more selling and pain? Yes, that's what I'm thinking. Even safe havens are falling. I think I have explained that to you, why gold is falling. And I had mentioned earlier itself that Bitcoin is tracking closer to S&P 500, and it's no longer what we thought it to be as a hedge for inflation and a refuge from risk. That's not the case anymore. So Inf and Hot Dog, do you have any comments? Do you want me to look at any tickers, or should we wind up the session? And while I wait for your response, I'm going to go and look at currencies and look at Bitcoin and see what the chart looks like. Hot Dog says, I'm good. Thank you, hot dog. And I'm looking at Bitcoin chart out here. A major support was out here at 76,653. It has held up for us. It's doing extremely well. So our next resistance, I think we have minor resistance at 87,726. And out there, I think we may bounce back down from there. And before that, we have the 200-day exponential, which is sitting at 85,667. That could be that could be a bit of resistance for Bitcoin. I think Bitcoin is aligned with the S&P 500. So this is a dead cat bounce out here. Vitals are not looking that great. Ethereum is also down. Ethereum has got a resistance at 1,932. I'm going to mark that red. And it has got a support which happens to be at 1,859, and it's going to be between these two ranges unless Bitcoin picks up. I don't see Ethereum picking up. Bitcoin is picking up right now. We'll have to see what happens at 10 o'clock because that will determine the fortunes of Bitcoin and Ethereum as well. So yes, FNGD would be good, and be careful when you buy it. And we have to look at resistance being retested, and if resistance are retested and fail, that's when to buy the FNGD. That's my personal opinion, and that's when I'm planning to buy more. In my portfolio, I have a lot of reds, but my FNGD and TSLS are doing extremely well. The other strategy I'm thinking of is that NVIDIA longs is cheaper than NVIDIA, and Amazon longs is also cheaper. Microsoft longs is also cheaper than Microsoft itself on the US side. So instead of going to the Canadian market, I would probably try to buy some of those on the US side to ride the way back up again. So that's what I'm thinking. So with this, I would like to bring this video to an end. Thanks to both of you for joining me, and I'll catch up with you guys again in the next session. Honestly, I don't know about leaps. I would look at your feedback on leaps because I have not done anything on leaps so far. I'm still learning and I need a little bit more experience. I have to polish my technical analysis before I move further ahead and look at leaps. Take care. Bye for now.